Today, the internet is drowning in speculation about the rapid development of artificial intelligence technologies. Many actively engage in the fabric of internet discussions about the future. Few people know that there has been a supercomputer for 30 years that has literally taken over the financial world and is a monopoly on trading data. There are many conversations going on in the circle of BlackRock. 7 influential founders, a mystical supercomputer, government connections, and the largest capital under management in the world. I guessed who we will talk about today. I will not pander to those who believe in conspiracy theories, and I do not intend to delve into the company's history in great detail. I will simply provide you with the details regarding, in all likelihood, the most influential financial corporation globally, and, of utmost significance, its entry into the cryptocurrency industry and the reasons behind its avoidance. BlackRock is an American international investment giant, a shadow bank that controls assets worth $21 trillion, is among the top 5 shareholders of each major S&P 500 company, manages the capital of the Federal Reserve, central banks and treasuries, and even rules the global financial ecosystem. BlackRock is a dominant force in the investment industry, with a vast portfolio and significant influence over the global economy. The company's extensive reach extends to managing the capital of the Federal Reserve. One of the 8 founders, Lawrence Fink, has been an SEO company since its inception in 1988. To the best of our knowledge, BlackRock conducts its primary operations not using its own assets, but by accepting assets from corporate clients and affluent individuals for trust management. The company's most famous product is one of the largest and most renowned global ETF providers, A-shares. ITF ensures. What is it about him that makes him such an influential figure in his field of expertise? Many individuals fail to comprehend that BlackRock is the entity responsible for establishing the gold market in its current form. During his days, his estimate was $1 trillion. Now it is about $13 trillion. How did they manage to achieve it? When BlackRock introduced their gold exchange-traded fund product, they started adding it to their model portfolios for consultants. Scouts who want to promote a product and earn a commission have started convincing boomers that gold is the perfect component to complete their portfolio and protect against inflation and other risks. The implementation in this activity gradually strengthened, and there was a boom. Demand for investments in gold, which led to a second-order effect, an increase in the volume of gold purchased by central banks. Yes, gold ETFs existed before BlackRock, but it was they who came up with the idea of turning gold into a cult. For 20 years, the company has ingrained in millions of users the concept of the necessity to possess gold for a well-rounded financial security in the face of its team of consultants. Beautiful, isn't it? However, gold is merely the tip of the vast and mysterious black iceberg. The primary secret of the long-term success of Company L is its supercomputer, Aladdin, which is unparalleled in the stock market game. Technological platform around which the entire BlackRock business is constructed. Click the subscribe button and observe attentively. Aladdin controls the majority of the global economy, approximately $21 trillion. This is more than China's GDP. The company itself controls about half of the funds, but all of this amount in one way or another goes through BlackRock. Aladdin sends money to the Federal Reserve System of the US, hundreds of banks and thousands of traders, and does 250,000 transactions daily. With access to confidential information, absorbing terabytes of data from all markets, the system calculates scenarios, every possible risk, and offers hedging options to mitigate potential losses. Any potential loss will be computed and then covered by the potential profit that is anticipated. BlackRock simply cannot lose money in the market. There is an existing market that they consistently excel in. The tech is classified and has been used exclusively for BlackRock's benefit for many years. Then the company began selling Supersoft as a service to other firms, relying on them depending on their unique product. Based on the statements of the founder Lawrence Fink, it can be said that they actively use artificial intelligence and machine learning technologies in the Aladdin platform, but it is unknown for how long. The company also conducted a comprehensive restructuring of its equity division, resulting in the termination of employment for the majority of fund managers and the assumption of control by Aladdin. Artificial intelligence has successfully replaced humans in managerial positions. In addition to the rapid development in the field of AI, BlackRock absorbs anyone who could compete in this industry. Such a technological advantage has rapidly moved the company into a new environment where the closest competitors simply cease to exist. The two biggest asset managers following BlackRock utilize their Aladdin computing platform. Among their clients are companies such as Goldman Sachs, Apple, Microsoft, Google, the world's largest state pension fund of Japan worth $1.5 trillion, and 10 largest insurance companies. Every major financial institution nowadays depends on this supercomputer concealed deep inside the BlackRock formation. In the present financial system, Aladdin is similar to oxygen, which BlackRock has the ability to terminate access to at any point in time. However, why is the government choosing to ignore the clear and undeniable dominance of BlackRock in the financial sector? The response is unoriginal. They will remain in each other's company. BlackRock is a significant collaborator of the United States Federal Reserve System in overseeing debt responsibilities and financial resources. During the 2008 financial crisis, the company aided in assessing and selling hazardous government securities, while also supporting private clients in acquiring comparable assets. Brilliant scheme, isn't it? During the pandemic in 2020, the Federal Reserve turned to BlackRock for assistance in overcoming the consequences of the financial crisis. Note that at this time, there were alterations in the financial charts of different assets and the speed at which the recovery was taking place after the corona dump. Additionally, BlackRock has collaborated with companies, banks, ministries, and government institutions in numerous countries across the globe. Their ties to the U.S. government are so close that it is already unclear who is working for whom. Since 2004, BlackRock has hired 64 government officials, and today many top managers of the company hold important positions in the presidential administration. There were rumors that Lawrence Fink could become the U.S. Secretary of the Treasury. It turns out that the corporation is an important tool in maintaining the dominant position of the United States in the global economic arena. For instance, the following data shows the percentage of the Swiss economic sector that is owned by BlackRock. The company also holds stakes in nearly every European central bank. In the largest media and food companies, frequently they purchase each other's shares to gain ownership through proxies themselves. Entanglements are mirrored in the intricate circular system of company possessions, but this is a separate and exceedingly interesting topic, which I will leave to you as homework assignment. I will only voice the essence. Corporations are capable of influencing entire industries, regulating both the performance of individual companies and the development of technologies in a particular sector. But BlackRock already fully controls an entire sector of the sapro industry by purchasing shares of the largest companies in the industry. Such influence can artificially limit the development of technology in the interests of a major player. By the way, regarding technology, what are your thoughts on digital gold? BlackRock drivers have noticed the great potential of blockchain technologies, but criticized cryptocurrencies themselves, stating that Bitcoin can be considered a money laundering index. For them, it was too speculative a tool without any meaning or future. But a few years ago, the corporation's rhetoric changed to the opposite. Now, in their view, Bitcoin is significantly more functional than gold and has the capability to not only replace it, but also evolve in the field of finance. It seems like BlackRock wants to create another gold rush under its black flag. But I recall that the company earns exactly from commissions, and their subsidiary company iSales is a top player in the global ETF market. News of the year. Just recently, the first Bitcoin ETF was approved in the USA. What is this? If we simplify it a lot, the company purchases BTC and then issues shares of its exchange-traded fund. Now, institutional and private investors have a relatively straightforward and uncomplicated approach to invest directly in BTC. This product genuinely represents the investment market. It has achieved widespread adoption. Thus, soon the large capital of the USA will become the de facto intermediary between a wide range of investors and Bitcoin. This will eliminate the difficulties for the authorities associated with controlling BTC and will allow to link a part of the dollar mass, which would otherwise have to be disposed of through inflation and rate hikes. It's not surprising that BlackRock was able to obtain approval for their Bitcoin ETF, given their impressive experience and expertise in this matter. Out of 577 applications submitted, only one was rejected. It is also interesting to note that Google will allow advertising of cryptocurrency ETFs from the end of January 2024. The path for big capital is almost open. When billion-dollar investments enter the cryptocurrency, it has a significant impact on the value of coins. 7 years ago, there was only $6 billion of liquidity for Bitcoin to rise from $1,000 to $20,000. Do you remember how much are the assets under management at BlackRock estimated at $10 trillion? Now imagine what will happen when only 3% of these funds are directed to BTC. Meanwhile, while the SEC is busy with lawsuits against cryptocurrency exchanges and the masses are waiting for the approval of ETFs, BlackRock and the largest US banks are quietly buying record volumes of Bitcoin. Looking at the largest shareholders of MicroStrategy, we can see that some major banks are buying huge volumes of their shares in the first quarter of 2023. This is the identical company that holds the largest amount of BTC among institutional investors in the market. At present, BlackRock possesses a 6% stake in the shares of MicroStrategy. In addition, they buy Bitcoins directly from miners, which contributes to the increase in network hash rate. This is done in order to avoid purchases on public exchanges and not to have a direct impact on the market. Recently, BlackRock also bought shares of 4 largest American miners for a total amount of $411 million at the moment of their price decline. Thanks to these very large investments, the company has become one of the leaders in the Bitcoin mining console, a lobbying group for the Bitcoin industry in the USA. Last year, the issuer of the second largest stablecoin Circle attracted $400 million in investments from several large companies, including BlackRock. A wide-ranging strategic partnership was announced to explore the possibility of utilizing USDC in the capital market. At present, BlackRock is the primary asset manager of the monetary reserves for USDC. Restablecoin is closely linked to the cryptocurrency exchange Coinbase, with which BlackRock recently began close cooperation in order to offer cryptocurrencies directly to institutional investors. Actually, the link between the Coinbase exchange and the Aladdin platform has been established, and now the platform calculates all the risks associated with Bitcoin for a particular group of players. This is the arrival of institutional investors into the industry that everyone has been eagerly anticipating through the Aladdin platform. Quiet, it doesn't matter. It is crucial that BlackRock's interest in cryptocurrency is not merely an endorsement, but rather a tangible manifestation of corporate interest. Asset managers do only what their clients want. This market entry shows us how seriously major players are interested in the crypto industry. Presumably, the corporation has now constructed all the requisite bridges to offer services to significant capital and is prepared to generate substantial profits from it. A player more powerful than the majority of countries opens a crypt to the wealthiest individuals in the most affluent country. A major rally or the greatest sell-off in Bitcoin history is looming. Well, we'll find out soon. Stay in touch.